Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, January 29th. Hope you guys had a wonderful weekend here. Wow, we got a really busy start of the week this week. This week's got a lot of data coming out, or a lot of events going on this week. So we're going to be enjoying a nice roller coaster ride here today. So today on the economic calendar, we got personal income. We had a 0.3% increase in personal income in November. Forecast is supposed to be continue that same trend at 0.3, and it went up to 0.4%. So good news, people are making more money. Consumer spending, we had a pretty big jump in November. December was supposed to have 0.5%, but not quite, a little bit lower than expectations in December. And last but not least, we get the PCE core inflation. They call this core inflation. This is where you strip out the food and energy, which creates a volatility. And this is what the Fed really gauges on, looks at in terms of inflation for the U.S. For us, our economy. And their target rate is 2% for the year, year over year. So currently, in November, went up only 1.1%. December was supposed to go up 0.2%, came in right at expectations. So that leaves us flat at 1.5%. So the core inflation is currently at 1.5%, still off the 2% mark. Now, if you go to the headline numbers, when you still include the food and energy, it went from 1.8 down to 1.7%. So the weaker dollars is kind of bringing up the inflation a little bit here. We're also getting a little bit more announcements of higher wages, so that could create a little bit more pressure down the line there. So we'll talk about inflation. There's a lot of concern with this weaker dollars we're talking about. So that's driving the markets down a bit, especially as you'll see coming up, the mortgage-backed securities, because that's its worst enemy is the inflation. So stock markets are taking a break. Dow is down over 100 so far this morning, and kind of taking a bit of a breather after taking new gains. It seems like almost every single day. So this week we got tomorrow we got the State of the Union address by the president. We got tomorrow will be the start of the FOMC with their announcement on Wednesday. They are not expected to announce any rate hikes this one, but next meeting in March will be the first one. So this will also be Fed Chairwoman Janet Yellen's last press conference, whereas the next one in March will be the new Fed President Jerome Powell, his first press conference. Now this week we also got job numbers coming out, which we'll start off with on Wednesday, ADP. Thursday we'll have the weekly jobless claims, and then the biggie on Friday, which will be the Bureau of Labor Statistics, or BLS's non-farm payroll numbers here coming out. So this week will be very, very, very busy here in terms of information coming out here. So let's go ahead and jump into take a look, see how the bond market is affected. So the bond market, as you can see, went way down. We're down over 37 basis points right now, which is obviously a lot worse in terms for pricing. So pricing has worsened quite a bit from yesterday. So we broke through this first level resistance here, and we're breaking below this floor of support we had for the next level down. So this could become a floor of support and push us even further down, unfortunately. And this is another reason why the yields are going up, are rising as now this is up here. This could reach all the way up to like the 3% range, and right now it's at 2.72 range. The good news on this, however, if the 10-year is still rising a bit, with the 2-year, the 2-year rising, that gives us a bigger spread. So that kind of helps increase that spread, the distance between the yield curves on there. So between the short and long-term yields. So that could help us in there. So the good news is that. So the bad news, of course, is interest rates are rising as a result. But stock market's rising, yields are higher. Economy's doing, so basically what that means is economy's doing great. So, all right. So that pretty much wraps things up. If you guys want to get more data, just come over to Twitter. You can find me on my handle at Mike Bjork, and hopefully see you guys there. You guys have a great rest of your day. Thanks so much for watching, and look forward to see you guys tomorrow. Bye bye.